The market has gone nowhere violently since October. We've been down, up, down, and back again, but we've really gone nowhere since October. Some people will call this trading in no man's land. So we're going to watch this video today about how to stop trading in no man's land. Maybe he's going to tell us to sit in cash and not F up.
Could be.
I don't know. Let's watch this together. He is a market wizard. I just recently learned that Lance is going to be one of the newest market wizards.
Oh, what?
Yeah. So this is actually really cool to be able to watch this. All right, let's start this video here.
Have you ever had a huge trade only to give all the hard-earned P&L back in the same ticker later on? Have you ever taken a bunch of small losses so that by the time the trade actually works, you only break even?
Well, that's the reason we sit in cash and don't up is so we don't take a bunch of small losses, so that when we get back into a trade, we have our full portfolio, or more.
Yeah, there you go.
For full portfolio or more.
Yeah, trade with SCOV or a settlement fund. It gives you a little bit of interest.
Exactly.
Are you on the cusp of becoming profitable and need just a little boost to break that barrier? Well, I'm here to explain a concept that I've seen transform traders once they've learned to internalize and incorporate it. That's right, it's the concept of no man's land. No man's land is how I describe price action that looks tradable but isn't. It's when a stock is stuck in a range and volatility is contracting. Prices chop.
Okay, this is exactly what we're seeing for the market, the S&P right now. Well, volatility though. Volatility's, I wouldn't say it's contracting. It's still quite elevated, and you can use the ATR to see that, right? Let me zoom this around a little bit. So you can see volatility was super low back in August, September, and it's expanded bigly, but we've gone nowhere. I mean, just volatile sideways is what we've got. Now, should we wait for the volatility to come back in? I don't know. I mean, I don't know how long it's going to take, but my screen just went black.
Well, volatility itself isn't that bad, right? As long as your position sized according to that volatility. The problem we're facing right now is there's just no trend.
Right.
It goes up, it goes down, it goes up, it goes down. And as a trend trader, it's really hard to make money in that space. It's much better to sit in cash and hold that money until there is a trend for you to follow.
Right. Let's keep going.
Noisy, and most importantly, your expected value is negative. So often, this is where traders bleed.
Expected value is negative. I guess he's meaning like where your edge is not positive. That's got to be what he means.
P&L, not in one big hit, but through death by 1,000 paper cuts. Let me tell you a story of what I see happen all the time, even with pro traders. I'm not throwing shade, trust me. I've made this mistake a million times. I was sitting down with a trader I mentor at S&B Capital. There was an amazing bouncy ball trade set up in Nikola. The trader had shorted ahead of the breakdown twice already earlier in the day, only to get shaken out both times. I don't recall the exact P&L, but let's say he lost 1K the first time and 1,500 on the second try. As a result, he was down $2,500 on the ticker. Later on in the day, when the ticker actually broke down, exited no man's land, he didn't take the trade. Why not? Because he didn't want to take another loss. So what happened?
Hindsight bias, baby. Is exactly what that is, right? And so that's something that Larry Height and I talked about. So he's like, listen, if your trade sets up for exactly what you're looking for, and you don't take the trade, you never had a plan to begin with. Just take your trading plan, throw it out the window, because it doesn't exist. Every trade is a unique a circumstance, a unique instance. And so the trade that you're taking, in this case, the third trade, has no bearing on what happened the first or the second time. This is a very difficult concept for traders, especially new traders, to get over. Super difficult.
Happened is he took the trade twice where it wasn't positive expected value because the stock was in no man's land. Then he skipped the trade where it was actually a good setup, which of course actually ended up working. So those first two trades he made, not only did they cost him $2,500, but it cost him another $2,500 in missed profits because his psychology was off for the real move. And here's the part traders tend to underestimate. Paper cuts don't just hurt your P&L. They damage your decision making. They shrink your risk tolerance and they make you hesitate. They turn good setups into missed opportunities. By the time the real trade shows up, you're no longer trading the chart. You're trading the emotional baggage from your earlier losses and you're trading your P&L. This is
exactly. Yeah. You've stopped trading your plan and you're just focusing in on what happened last time rather than what's happening right now in front of you.
I have personally been hit by that many, many times. And I just have to tell myself, look, this is my plan. I'm going to trade my plan. I'm going to look for my signals. Sometimes just getting up and walking away and thinking about something else can really help that emotional decision. And we do have many videos about the trading psychology and how to kind of overcome some of those. Straight on YouTube, the Outlier Training with Joe channel. Check those out.
This is why no man's land is so dangerous. It doesn't just take money from you, it takes away your confidence at the exact moment you need it most. This is exactly why every trader needs to master their psychology and why I've shared my biggest psychology lessons and interviewed the leading performance trading psychologist on my channel.
I don't know who that is. Jonathan Katz. You ever heard of Dr. Brett Steenbarger?
I have not.
Oh, he's one, in my opinion, one of the leading trading psychologists. Guess who interviewed him?
Oh, was it
A
you?
billion years ago. Yeah,
That's cool. And you can find that video on YouTube.
on my YouTube channel for sure.
Yeah.
How many more times can I say psychology in one sentence? Anyways, these two videos are linked in the description for you to watch next. If I were a betting man, which I am, I would bet most traders would be absolutely shocked if they analyzed their data of taking trades in no man's land versus when stocks are breaking to new highs or
Let's go. That's what you're looking for right there. Now, not every time this happens will you let me rephrase that. When this happens right here, it could be that, right? In fact, let's draw it here. Okay. When this happens, it honestly could be this, but you don't know until you see those little pullbacks if it's just going to continue to bounce back and forth. There's no way to know if this and this are the same thing. And because of that exact thing, you have to take the trade each time, right? Like he's talking about, because if this happened 2 or 3 times in a row, to this exact example earlier, but yet the third time is when it actually ran, we don't know when that's going to happen.
or new lows. Many of the less experienced traders I work with have not analyzed their data enough to recognize that 90% or more of their paper cut losses and their churning tends to occur when the stock is done making its move for the time being and needs to consolidate more. This is not to mislead you and say there is never a trade in no man's land. It just means that the probability of a clean move is much lower and the odds of paper cut losses is severely increased. If I do tend to trade in no man's land, I tend to be sized much lighter when I do choose to participate. So let's take a look at what no man's land tends to look like. First, traders most often get caught up in no man's land after a stock has made a leg in one direction, has had the counter leg, but then is chopping around while volatility contracts. Another common place is after a stock has broken out and made a leg, then is consolidating ahead of the next leg. So many traders wrongfully try to position themselves ahead of the real breakout and paper cut themselves
Stage 2, stage 3, and then a new stage 1 to a stage 2. You don't always have to have a stage 4.
up in the aggregate. In this image, I want to only be trading it long right here, not making any attempts to long the stock in this.
And I would bet that there was an order block right there.
Mm-hmm.
I would bet that there were overhead sellers ready to sell it as fast as possible. And once you clear those orders, then there's nobody left to sell, so they're all going to be buying.
This range or in this one. As with anything in trading, it's all about nuance and exceptions. So what are the exceptions to trading in no man's land? The first one, fresh breaking news. If there is fresh breaking news, all the prior price action isn't relevant to me. You aren't going to wait for a breakout of that range. You want to be trading the news as quickly as possible. News is one type of information edge, and I cover all 6 types of edge in this video. I highly recommend you watch it after this one. Another exception is if there's a very clear support or resistance level you can buy or short into.
And that is what we're fighting with right now, right, at the time of this recording, because we have a very, very obvious resistance level here on the SPY. Now, you can make your charts look exactly the same as mine by going in our Discord and then going to the trading view section, and you can have your charts look identical to mine with the same outlier blocks that we can plot on the chart for you. So you don't have to guess where those support and resistance lines are. They're just there for you. Makes life way easier.
And Chris, another feature which we didn't mention yet. He's talking about fresh breaking news. Outlier actually has a new feature that tells you if the news is positive or negative, how many news articles perhaps there may be on a topic. So if you're someone who,
That's true.
if you're someone who includes news in part of your trading plan, you can
Yeah.
get that information right from Outlier.
In fact, you can get it on your homepage. You just go to the iNews coverage list. Joe, thanks for pointing that out. I completely forgot about it. So like something's happening with ConocoPhillips. It's getting unusual news activity and it's bullish. And then something's happening with ASML. I don't know what ASML is. ASML Holdings. and it's got bearish unusual news activity. And TMT is the top mentions today. So which stock is getting the top mention today? Netflix. So bullish unusual news activity with top mentions today. That may be something you want to trade. It really may be something you want to trade. In fact, let's pop into Netflix. Now, Netflix has been in a big nasty downtrend for a while, but maybe this is the bottom, right? And then for you, maybe this is what you're looking for to start your positions in it, right? Come over to sentiment here, and let's pop this open. There you go. So you can see the number of neutral stories, bullish stories, and bearish stories. And while it did pop up a couple days ago, it's definitely pulled back in. But this is one of the most active news stocks inside of our platform. So pretty cool. At some point, I want to get this moved over to be right here inside of the price charts and everything, and then you can align where like the news peaks to like maybe this peak in price. That could be really cool.
That can be really cool, yeah. And that's just part of making adjustments to your plan to improve it, because there may be something obvious there. News hits, sentiment changes, the trend changes, and you can get that signal a little earlier than something like a photo for sure.
And all this is only 82 cents a day.
82 cents a day.
82 cents a day.
No man's land. Kind of like a consolidation inception, if you will. But remember, this is still lower probability than breaking out of the range as a whole, so size accordingly. So how do you want to implement this concept into your trading? First, define no man's land for yourself, and then crunch your data to see just how much P&L you're.
Ooh, I love this. He's not telling you what no man's land is. He's telling you go find it for yourself. I love that.
Yeah.
Now, I love that because I'm a professional investor. So is Joe. But for a new person, they're probably like, oh, well, what does that even mean? How do I even find where no man's land is? I understand that. Maybe he'll give us some details.
For giving back by trading tickers while they are still mid-range. From there, start to create rules that help you avoid trading in no man's land. Then, next step is to practice identifying no man's land in real time.
This is good.
Yeah.
This is real good.
That's a good video.
So that you can avoid the bad trades as they unfold. Continue collecting data to refine your trading from there. Maybe that might mean less sizing for you when a stock is in no man's land. Or maybe that might mean a maximum number of attempts. Or maybe it means avoiding that trade altogether. Let me give you a few practical examples of such rules I've used or seen implemented on the trading floor. If a stock is still trading within the range, any trades I take will be small size, and at max, I want to give it 2 attempts. That seems like a super reasonable rule and way to adapt some of this. Another few ideas could be, I'm not allowed to short a stock after a large down leg unless it's consolidated for more than 30 minutes and then breaks to intraday lows. Or I will avoid all.
And I'll go back. Right. So these rules are not universal. These are your rules. He's just giving examples. Because I give no monkey donkeys about what's happening in 30 minutes. I'm looking at daily charts. But for somebody who's trading differently, they may care a lot about what's happening in 30 minutes, right? Let's say that, equivalency, right? One minute candle could be equivalent to one daily candle. So over the course of 30 minutes, 30 candles could be worth like an entire month of trading for me. So I totally get that. And I'm not to say my way's right and your way's wrong or vice versa. You got to figure out what works for you.
I'm getting the impression he may have separate trading plans based on what's happening in the market at that given time.
Probably.
And I think we heard that from Mark Minervini too during a recent interview video where he had multiple plans based on what was happening at that time.
Makes total sense to me. And you have to be adaptable. And sometimes being adaptable is, going to cash, just waiting for your next trade setup. Because I would bet that in his trading plan, if let's say that he's putting this trading plan on SPY, right? What's he doing the rest of the time? He's sitting in cash. He's waiting for those opportunities to come to him. When they come, that's when he's aggressive about it. That's what I would imagine. Let's keep going.
For more than 30 minutes and then breaks to intraday lows. Or I will avoid all mid-range continuation plays unless we break to fresh intraday highs. Trust me, no matter how good you think you are, this concept applies to you. Regardless of skill level or style, understanding this concept is crucial because it helps us identify another key variable in our trading, whether a stock is still in a range or breaking to new prices. Almost all the traders I've worked with don't differentiate their trading enough based on this concept. Once you actually take the time to look over your trading and reflect, it is almost universal that somewhere you find yourself blind to these nuances with massive room for improvement. One of the most common sayings you'll hear me say to my trainees on the desk is to stop obsessing and studying how to master the Jack 5. focus on the pocket pairs. One trader I trained would always ask me about the really marginal no man's land setups that I consider to be pretty 50-50 mediocre trades. What I mean by this poker analogy is for him, mastering the mediocre hands doesn't get you anywhere. It's like stepping over dollars to pick up pennies. This trainee eventually got the point and started mastering the setups where the stock was breaking to new prices. That ended up really transforming his trading and ultimately saving his career because so many of his prior losses were coming from trades where it was stuck trading within a range. I'm working on a video that goes into the ways to tell when you're breaking out of no man's land. This is when the odds are in your favor. This is when you have edge. This is when
I'll watch that video, Chip. I'll definitely watch that video.
Yeah.
This was not bad. This was not bad. I would appreciate it if you had added how to tell if it's breaking out of no man's land, right? So how would I do that? I would wait until I see it breaking to newer highs. Nvidia is a really good one as well. That's been stuck in a sideways range, right? So to the downside, like let's say you want to go short, you want to go short after it clears this order block down here. You want to go long after it clears this order block right here. Now, it did that, but that doesn't necessarily mean that it's going to go straight up from that point, right? In fact, we've been watching this for several days. And I said, one of my very favorite trading setups is when it's running up into earnings, which is exactly what happened here. Now, had it not had earnings, maybe it could have gone further, but earnings are a huge gamble. As you can see right there, how much of a sell-off was that? Only like a 10% sell-off.
Ooh, ouch.
Yeah. And it's Nvidia. It only goes up, right? Yeah.
Yeah, and if your stop loss allows a 10% loss, it might be too big.
True. Or you trade a lot smaller.
Yeah,
I
cool.
mean, you can have wide stops, but smaller position sizes.
Mhm.
Or and really, this goes back to one of those trading plan details you've got to figure out for yourself: is do you want a big position with a tight stop, or do you want a smaller position with a wider stop? Both of them will eventually get you to a profitable strategy if you work it correctly. But I mean, you've got to figure out how much you're willing to sleep at night, I guess you could say, right? Just sell down to the sleeping point. It makes life a lot easier.
Okay.
So, Joe, this was a pretty good video. I like
Yeah,
this.
this was cool.
I'm always about let's find ways to increase our personal agency, right? Our own methodology, our own trading plan to become successful traders. So I don't mind this. This is pretty good.
Yeah, this was cool.
Yeah.
It'd be great if we could interview him, actually. He's a good dude.
Not Lance.
Yeah, and Lance is
Great.
cool.
In fact, I think I'll have to comment on his video one day. Do me a favor. You guys go leave a comment on Lance's video as well. Say, hey, OVTLYR would love to partner with you. In fact, I was just emailing Minervini a few minutes ago.
Yeah.
And yeah, we've got a new thing coming up with Minervini really soon.
Ooh,
Very
nice.
excited. Very
Don't tell anybody. It's inside scoop.
It's a secret between you and me. Don't tell nobody, okay? Me and Joe the Leprechaun. So listen, if you're ready to save time, make money, and start winning with less risk, click one of those two videos. Have a fantastic day. We'll talk soon.